Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, it's time for our weekly US stock market roundup, and we're going to be looking at the S&P 500, the NASDAQ and the Dow Jones Industrial Average. We got several counts to consider today, both bullish and bearish, but before we get into the Elliott wave section, we're going to do our basic technical analysis first, as we always do on this channel, and our Elliott wave analysis second. But before we do that, we're just going to give you a quick rundown of the chart setup in case you're new to the channel. So we have our Elliott wave count here, which is all the numbers and the letters you can see on the chart. We're just going to clear those out of the way. We have 4 exponential moving averages, 10 in yellow, 20 in blue, 60 in orange, 250 in green. We have a volume profile on the right hand side here, showing all the different peaks of troughs of the buy-sell volume, with the extreme of which being marked by the yellow dashed line, which is our point of control. We have an RSI set to a 10 close, with the green 30 level representing oversold and the red 70 level representing overbought. We also have a MACD here with the 10 for a short-term moving average marked in blue, and a 20 for the long marked in orange, and a 9 to smooth. Right then, we're on the weekly time frame, and we're going to start our analysis here on the SPY. So, another bullish week, finishing in an all-time high for the S&P 500. Very, very strong week again. We've seen this same trend continuing now for a while, which is relatively flatline momentum and continuing to push highs, but we just can't argue with the price action. The price action is still comfortably above the 10, 20, 60 and 250 exponential moving averages, and still looking strong, looking like we've made a new all-time high, and we're probably going to push further in the next couple of weeks. RSI still below overbought conditions. Probably, I would suspect in this last push we might come back up to overbought. Well, we'll have to wait and see. The MACD here showing that we've had this bearish kind of momentum over the last few weeks, where we crossed over negatively short term over the long term moving average, but we are starting, having flattened out, we are starting to curve back up now. Haven't got a bullish signal crossover yet, but it looks like if we would continue this momentum into next week, we should get it, and then we should see another thrust higher for the stock market. My own Elliott wave count still supports another push higher, and I think that is coming. It may be the last one of a very long bull market, but we have to look at other options too, and we're going to do that later. So looking bullish all round on the weekly time frame. Let's come down to the daily and see what we can see here. So another very strong close on the Friday above the 10, 20, 60, 250 exponential moving averages. Moving back towards overbought conditions, we've seen what was a divergence between the high of the 17th of March and what was a pullback from the 29th of March. We had a high and a lower high here, and it wasn't a divergence, so to say. We were suspecting that if we had another high in here and then rolled over, that we would have that bearish divergence, but instead the RSI has come higher, so that's no longer the case. The RSI high and higher high is supporting the price of high and higher high, so there is bullish momentum here that's valid on this time frame. We do, however, if we go back further and we go back to the 8th of Jan, and we go all the way to also the 12th of February, we've still got a divergence between the highs back here on these dates and the highs we've set since in price. So we still do have a bearish divergence, but it's getting close to disappearing, and another violent uptick in price may cancel it out completely. If we just come back to the weekly time frame for a moment to see what this looks like. So the high from the 4th of Jan onwards, really, and then we've got a high on the 8th of Feb, which is still above the current high in the RSI, so we still do have bearish divergence. But if we come up and take away the peak of the high here on the 4th of Jan, then that weekly bearish divergence would disappear, which would be an extremely bullish signal that we can't really ignore. Same would be true here on the daily time frame. So if it's going to turn negative, it would have to do it pretty quickly, pretty violently, in order to preserve a lower high here on the RSI, but it doesn't seem to be showing any signs of doing that. So we'll talk more about that in the count when we come to that section of the video later. So on the MACD also, we've got these nice bright green bars on the histogram showing up a daily crossover of the short-term moving average over the long, and the building up of bullish momentum, which doesn't appear to have shown any sign of peaking yet. Short-term moving average is accelerating away from the long-term moving average. We still do have this running divergence here on the MACD from high, lower high, but once again, if the high on the 17th of March gets taken out on the MACD here, and also on the 16th of Feb, then that divergence will start to disappear. So clear signs coming in the next week or so, I think. Alright then, so that's basic analysis for the S&P. Let's go over and have a look at the NASDAQ. Now what I'm doing today is I'm using a bunch of simplified charts where I've really stripped down the count. We can dig into the minutiae when we need to, come in and have a look at the smaller details, but we're just going to try and keep things relatively simple. So let's just strip away the count here for the moment and have a look at how things look for the NASDAQ on a weekly time frame. So while the S&P is going on and pushing new highs, and the Dow is pushing new highs, the NDX is not. The NASDAQ is not setting new highs, and we actually have a bearish count in play for the NASDAQ as our main count, but we will look at the bullish count for the NASDAQ as well today. So, very bullish week for the NASDAQ. We see a wick to the downside which tested the 20 exponential moving average on the weekly time frame here, which is this blue line. And we've been reluctant to close below this for the last 5 weeks. We've bodied the candle above it here on the week of the 1st of March. We've closed slightly below it, but we've turned around and closed it well above it on the week of the 8th of March. We wicked down to it on the week of the 15th, wicked through it on the week of the 22nd, but closed above. And it would appear that we are absolutely determined to stay above this level. Wicked to it again last week and now have closed above the 10 exponential moving average, broken to the upside with a very bullish engulfing candle here, setting a high above the previous 4 weeks. So very bullish turnaround in the NASDAQ. It could be A, B, C coming up into a 2, or it could be the wave 1, wave 2 going into a wave 3, pushing higher for another impulse wave up to new highs. There's basically going to be the 2 counts. If we come down to the daytime frame, see what we can see here on the NASDAQ. After all this coiling activity I mentioned in the previous video, where you get all this coiling up of the moving averages, this tends to signify pressure building up before we break one the way or the other. Well, that's exactly what happened. We built up all that pressure and popped up quite violently, and here on the NDX we've actually opened up a gap on the daily, so we will likely be coming back to close that gap at some point, but it's likely a breakaway gap given the time we've spent consolidating, so we should see continuation follow through here before any opportunity to come back and close this. If the bearish count is right, we could easily run up, complete the count, come down and close it on the way down. If the bullish count is right, maybe we're going to have to wait before another impulse wave completes and get a deeper correction to close it. We will have to wait and see. Doesn't have to close, it's an upward gap here. It more commonly it does, but it doesn't have to, so we'll keep an eye on that. Daily time frame, like I said, above all the major moving averages, 10, 20, 60, 250. I've also got this 100 moving average that I use on the NASDAQ as well. Simple moving, so it's an exponential moving average, sorry, and we're above that as well. RSI has us moving out of the neutral zone between 40 and 60, above 60, heading towards overbought conditions, but not there yet. The long-term bearish divergence between the high of September last year and the high we set before breaking down, and a series of lower highs since, high on the 8th of December, high on the 31st of December, high on the 26th of Jan, high on the 12th of February. All these were a bearish divergence which broke down into this correction. Now, with the way we're coming up at the moment, unless we turn around into the bearish breakdown and have 5 waves down, 3 waves back into a 1, 2 and then start to fall down, let's just get rid of the count again for a minute, focus on the basic analysis. Unless we get that, then it's likely again that a push up into, if we do get a push up into overbought conditions and start to accelerate towards the previous high, a lot of this negative bearish divergence could be undone, and that would be interesting, and that would push the NASDAQ higher as well. So basic analysis complete. On the NASDAQ, let's have a look at the Dow. Different count on the Dow, we'll talk about that later, but above, on the weekly time frame, above the 10, 20, 60 and 250 exponential moving averages, a very indifferent week. Very, very, very indifferent week for the Dow. While we've seen violent price action in the S&P and a big thrust up in the NASDAQ, we've barely moved. Almost barely moved for the whole week. The entire week's range is one of the smallest ranges I've seen, bar the week of the 17th of Feb. We're talking. What are we talking? We're talking a range of well, if let's say wick from wick rather than the body of the candle. Let's look for the whole range of the week. Around 1%, 1.07. So the market's just gone sideways all week. It's barely done anything. If we look at the RSI, we are in overbought conditions. Now, unlike the negative divergences, the bearish divergences which built up over the weekly time frame in the S&P and severely in the NASDAQ, we don't see that here in the Dow Jones. We see a series of higher highs in price and a series of higher highs in the RSI and the MACD. Little, may perhaps a sign of perhaps losing some bullish momentum, but no way of calling it remotely bearish yet. We've still seen larger bars on the histogram. We're slightly flattening out, but this could just be a temporary lull before pushing higher. No sign of crossing over yet on the weekly time frame. Up into overbought conditions. For the first time, we've reached the highest overbought condition on the weekly time frame since the breakdown in the last January in 2020. So we are reaching a traditional overbought metric, I guess you could say, rather than a divergence-based momentum. Looking at momentum from a divergence point of view, we are generally just getting overbought. If we come down to the daily time frame, we can see some divergence on the daily time frame, but before we look at that, we're still above the 10, 20, 60, 250. On the daily time frame. On the RSI, we have a high, lower high, potentially lower high here, but looks to me like we're going to go higher in the short term. I think we're going to push a little higher in the Dow. I think we're going to take out we're going to set a new all-time high. That's likely what we're going to do. Flatlining here on the MACD, but no sign of breaking down yet. The same with although there is some negative divergence here, bearish divergence in the RSI, no strong sign of breaking down yet. Okay, so that concludes our basic analysis for this video of all the indices. So let's come in and start looking at these counts now. So we're going to start with the count we've had on the S&P for a while before we look at we're going to look at the established counts first and then the alternate counts. So let's go full screen and let's just remind ourselves of where we are. So I've had this set to go higher, my primary count being thus. We'll look at a less cluttered, more simplified version of this in a little while. But I'm still favouring this being a primary wave 3-4 and this move up being being the fifth and final primary wave of cycle wave 5 yet to finish. Got a little higher to go and we're going to finish somewhere up here. So let's just tidy this up, get rid of these waves, and we'll zoom in and have a look at price action more recently. Alright, and so let's come down to the 2 hour. Alter the chart. So you can see how we have this expanding, it's another expanding wedge kind of pattern. All we've done is link the lows of the intermediate wave 2 and intermediate wave 4, intermediate wave 1, intermediate wave 3, and normally the 1 to the 3 projects to 5. So I've still got the 5 waiting out here higher. I've currently got, it depends on the time it takes to get up here. So this count is getting a little tricky at the moment, and there is an alternative, but I've got this as a minor wave 1, 2 here, 3, very deep 4, but it doesn't invalidate the 1, and now we're in that fifth minor wave of fifth intermediate, of a fifth primary, of a fifth cycle wave coming up. That's one way of looking at it. Another way of looking at it is that all of this move up so far was just a 1, 2, and we've got a 3, 4, 5 to come. If we just leave it on the chart, and we'll stick that into minor count as well, just as an alternate thought. So rather than having gone 1, 2, 3, 4, now working on the 5, we've just gone 1, 2, and then we've got a big wave 3, 4 and 5 to come. That would project the price to go significantly higher and likely break out of this trend. It doesn't have to be the case, but that's what I would expect to see if this was a 1, 2. It's deep enough to be a 1, 2. It's a zigzag, which is what we'd expect to see in a 1, 2. So, and it fits the expectations of a wave 2 better than it fits the expectations of a wave 4, if I'm completely honest. So there is potential here for a very bullish count to be actually unfolding, pushing a lot higher. But in the meantime, we are going to stick with our count here because we do have to take account of this initial move off the low. We can't ignore it. If we come back to here, we do have this initial move off of the low, which sets a higher low to this low. So we're not counting this as the completion of a correction. We're counting that here. And this is the first move up. So it does seem to make sense that we've gone 1, 2, 1, 2, rather than 1, 2, 3, 4, 5 into a 1. It's a bit tricky to make the wave 3 work if we want to count this as the wave 1, where we can quite easily go 1, 2 minor time frame, 1, 2, 3, 4, 5 minute time frame, 3, 4 minor time frame, deep wave 4, and then the wave 5 to finish. That's this count on the S&P. It's still valid, and we did have that violent pop up on the Friday, so we're probably, if that would make sense if we're pushing into a wave 3, whether we're pushing into a wave 3 on the minor time frame, which is going to take us significantly higher, or a wave 3 on the minute time frame, which is starting to accelerate into its terminal phase. They both kind of fit for the moment. So before we move on from the S&P, let's have a look at the alternative count for the S&P. So zoom in, full screen. This works on the basis that this whole move up from the low on the 24th of September last year was the completion of primary wave 4, and since then we've been working on a 5-wave structure up to higher highs on the 5th of the 5th of the 5th, very similar to the other bullish count, but instead of this being an impulse wave and counting this as this structure here as the wave 4, we're going with the more common bullish interpretation, which this is a wave 1 and a wave 2, and then we've got a flat pattern in the 3-4, and we've got a 5th to come, and the whole thing is being counted as an ending diagonal, so a series of 3-wave structures to make up our 5th and final wave. Unlike a leading diagonal where we can live with 5-wave structures, we have to be more strict and get the 3-wave structures inside of each move, and you can see how they are all currently present and correct. So we've got in each leg up, we've got 3 waves in a 1, 3 waves in a 2, 3 waves in a 3, 3 waves in a 4, and potentially 3 waves in a 5th. So this could be an ending diagonal. So I'm trying to give you, the best insight I can here, but I know I'm saying if and could be, but it's a tricky count. It's not a pure, clean impulse wave coming up like we would have seen finish. We can make it look like an impulse wave. We can count it as an impulse wave, but this is a perfectly valid option, and I'm starting to like it more as time goes by, to be honest. So that's how I see the potential counts for the S&P so far. Like I said, we do have to consider this potential orange count, which is we've only done a 1-2 in the 5th and final wave, which would push the price up significantly higher than I'm expecting either of the other counts to complete at. This ending diagonal, we do have a wedge shape so far, linking the 1, the 3 to find the 5 and the 2 and the 4. We are narrowing, not extremely, but we are narrowing. We would like to see that in a diagonal pattern. We can count 3 waves in every structure, which we'd also like to see in a diagonal. So this is probably going to garner a bit more attention from me going forward over the next few weeks. Right, let's have a look at the NASDAQ and bring up the simplified count. We've got 2 counts to look here at the NASDAQ. We've got a bullish count and we've got a bearish count. So let's go with the count we've been working on more, which is the idea that the NASDAQ has already topped and the other markets are still pushing higher, waiting to top, but the NASDAQ has already completed its 5th and final wave. Now this is really simple. If we come down to the 2-hour time frame or to the chart here and look at the targets I put on the chart here. So let's just hide the favorites for the moment. So I'm saying this is a 5-wave structure down here. Actually, we're going to need them. So for the bearish count, suggests that this is a 1, 2, 3, 4 and a flat, 5 here. This is a perfectly acceptable impulse wave down into a wave 1 because we have a wave 3 is not the shortest. It's not shorter than wave 1. And not shorter than wave 5, so it's a legitimate impulse wave. There's no overlap of the 4 over the completion of the 1, so it's a legitimate impulse wave, and it counts cleanly as a 5-3-5-3-5 structure, so we're happy with that. We then have a 5-wave move up off of the low, and this is either going to be a wave 1, after this being an ABC, we'll talk about that in the bullish count, or this is an A. In this count, this counts as an A. 3-wave move into a B, and now we should see a 5-wave move up into a C. And that C will be the completion of the wave 2, and then we'd be bearish. Now I'm expecting, if this plays out, I'm expecting to see the wave 2 come back and test this broken trend, this broken fib channel here. We've come up and bumped it once, we're close to bumping it again. We've put in what looks like a wave 1-2 here, looking for a wave 3-4, and then a final push up to find target up here. Now the target I've got set on the chart here is the 1-to-1 parity of wave A here projected from wave B would bring us up to here, which would bring us into a double top pattern, which is what I've been suspecting would occur in the NASDAQ the whole time, because dips get brought every time, and so the recent dip would have got brought as well. If we look at our fib retracements from the high here, we can see that we have a 89%, or you can call it 90%, but I actually have it as 89% fib retracement is what I use. That could coincide with the back test of the trend line. It could still produce a lower high, which could be a deep wave 2. We have come up to the 707. Now the whole reason I include the 707 as in my fib retracements, even though it's not a Fibonacci number, but I include it in my retracements, is it does have a strong relationship on all time frames. You go and look for yourself with the NASDAQ. And we just came up to it and just kissed it and started to sell off a little bit. So, well, we're in the region of it, you can say at least. We came up initially to the yellow zone, 61.865, came into it, found resistance, came away, come back through it. Maybe we're heading for the 786, maybe we're heading for that 90% or 89% retracement to find parity of the A and the B. And, you know, this one's really simple now. If you're in the C wave here and you're bullish, then your cutoff point is the bottom of the B at 12607.75. That would be your stop. If you already got in on the move of the A, or got in on this 3-wave move, because if you are bullish, you're looking for 5 waves up, 3 waves back. So let me just show you what I mean. You get 1, 2, 3, 4, 5 waves up, 3 waves back. You buy here, stop goes here, and then it's all gravy on the way up. And that's that. Now, if the bearish count is correct, we will top out before the previous high. We have to in order to have a wave 2. So the cutoff point for the bears is all the way back up here at 13,902.50. But I'm getting close to being tempted to short this at the moment, and we are shrinking down that margin of error. We are now down to, where are we? Let's just pick out measuring tool here. We're 3.8% off the high, and we've already gone through 61.8. So it's really down to the kind of risk you want to take here. We haven't got a completed 5-wave structure, right? So if this is a zigzag, we'd have a 5, 3, 5. I want to see a 3 and a 4 and then a 5, and that's when I want to short. I want to see a completed 5-wave structure. If we can get to parity, that would be brilliant. And then if I see 5 waves complete here, I would definitely take that short, because if we were lucky enough to get A to C parity, we would then have a much tighter margin of safety for a short here of only 1.5%. Now, we might not get it. You might have to pick the invalidation point here of our proposed wave 1 as well. So if the price were to come back below this level and you wanted to short it, 1303.50, you could have confidence that we're going to break down. If we come down and take out the low of the B, then we are bearish. I think the only way we wouldn't be would be if this was a more long-winded structure, so like a 3, 3, 3 before going higher. But I would take out the bottom of the wave B, and I would be more confident that we're bearish. But I don't like trading breakouts. I like to trade retracements, and if we can get a 1, 2, 3, 4, 5 near parity, close that gap, then we can trade the retracement instead, get short and call the previous all-time high our stop, and then if it does break to new all-time highs and the bulls are right, we're out nice and early. So a little too early for me yet. Getting close though to considering shorting this from here, but I want a better margin of safety. Plus, you know, if we are at the top, and I mean the top after 12 years, you're going to have plenty of opportunity of primary degree to short this if we're coming down in 5 waves into an A on the primary level, because this is a cycle wave, so we would have 5 waves down into an A, and this is only intermediate degree 1, 2. We're saying it could be even smaller. None of this is knowable yet, so don't be in too much of a hurry. Right, so that's the bearish count. Let's look at the bullish count. Bullish count's really simple, which is rather than topping out here in a wave 5, we just topped out in an intermediate 3. Now, I've explained this in the previous video, how the bulls, by the skin of their teeth, defended the invalidation of this count by getting the wave 4 to bottom without overlapping the wave 1. I know here it looks insanely close, but there is a gap, and it didn't happen, so it's a valid count. So this one just has us going up to 2 targets I've got set up here. We've got the 61.8 of 1 and 3 from 4, so all we've done is taken the length of 1 and the length of 3 together and project it from the bottom of the wave 4, and that gives us a price up here at 14,191.8. The other one is wave 1 projected from the 4. Now the reason I'm doing that is we got our extension in the wave 3 here. Our wave 3 is quite an impressive wave 3. If we take this wave 1 and wave 2, we can see that we get it past the 1.618 and push towards the 200. In a log scale, we top out near the 1.618 and in between it, so it looks like a pretty strong wave 3 to me, that does, and definitely longer than our 1. Not the shortest, so we can't put a limit on the wave 5. If wave 3 had been shorter than 1, we would have to have a limit of wave 5, because 3 cannot be shorter than both 1 and 5. With 3 being long, 5 doesn't have a limit on it. So although I set a target of 100% of wave 1, this would be very normal, and this would also produce a double top, but with a slightly higher high. That's quite a common setup of the length of the 1 projected from the 4, because we had that extension in wave 3. The alternative is 61.8% of the length of 1 and 3 projected from the 4, and this puts us up higher, like I said, at 14,191.8, but there is no technical limit on the 5 here because we didn't have a shorter 3. So let's come in and have a look at what our bullish interpretation of this move up off the low would be. We would have to say this is a 1 and this is a 2, so now we'd be projecting 3, 4, 5 on a minor time frame. So let's just do that and see what kind of numbers we'd get. So we're just going to zoom in here down to the 2 hour and see what we can see. So this is our 1, we're saying, and this is our 2. This is the bullish idea. So we want a 100% at least we want to see. Now 3 can be shorter than 1, and we could be setting up some kind of diagonal, it's possible, but let's just stick with the idea that it's an impulse wave for a moment. So we want to see 100% of 1, but we could see 161.8 of 1. So 100% of 1 would put the 3, or just beyond the 100% would put the 3 here. 4's got very little room to maneuver before overlapping the 1. So I would prefer the look of a bigger extension, perhaps up to the 123.6 or 1618 for the 3, and then the 4, and then the 5 finishing. Now this would take us higher than our targets. So the wave 3 projection at 1618 would take us above both of the intermediate time frame targets for 61.8% of 3 and 1 from 4 and 100% of wave 1 from 4. So that would be a very bullish interpretation. It is possible, but if we were going to come up in a 1, 2, 3, 4, 5, then perhaps we should be thinking about aiming for one of these targets until we clear them. You know, assuming that we are going to complete a wave 5 that's more proportional to the previous waves in the pattern. So let's just project that again. And we'll say 123.6. There's no way of knowing. 4 and then 5. That gives us a perfectly acceptable projection for an impulse wave up to a higher high, taking the price up to that 14191.8. But it could go higher. Like I said, there's no restriction on the wave 5. So that's the bullish count. So bearish count is simple. We can't take out the high at 13,902.51. We'd like to see A to C, wave C to A parity projected from the B, which is at 13,690.50, and then we'd be looking to short if you're of a bearish mindset, getting as close to this previous high, biggest margin of safety. And then if you're bullish, when you know you've seen 5 waves up, 3 waves down, you should already be in. If you're bullish, you should already be in. So maybe if you're not 5 waves on a minor time frame, on a smaller time frame, minute time frame, 3 waves back, then get in. But if we're bullish, we're going higher. We're going to set a new all-time high. We're going to go out into May, perhaps into late May, and continue to push this market higher if the bullish count is right. So now the Dow Jones. Let's come over in here and have a look. Okay, so this is my ABC count, it's called. Now this is, I'm including this in the video because I didn't last week, and I still can't find a count which supports the NASDAQ and the S&P in their counts, which counts cleanly as an impulse wave without overlapping. But well, I can, but I struggle more with the start of the count than I do with the end of it. So this is a completely different idea. I'm just keeping it on the table because I genuinely find it interesting, and I want to keep updating it as we go. It gives us an alternative. This is the idea that the Dow topped back in 2020 in the 5th of the 5th of the 5th, and all we've seen since is an A wave in 3 waves down, which was the COVID crash, like that. And then now we're just seeing 3 waves back up in a wave B, in what we call an expanding flat, where the wave B comes back beyond where the wave A began, and then eventually crashes down in an almighty crash of 5 waves, taking the C beyond where the A completed, bringing the Dow down below 15k. So in like an uber bearish kind of expanding flat pattern, like this. Now if this was true, then this cycle, super cycle wave 5, would have to be incorrect here. The cycle wave 5 we can live with, but we'd have to have a super cycle wave out here. We'd have to say that this was super cycle 3, and we were going into a big flat pattern. There is the argument to say that this is grand super cycle 1, and we're going into an expanding flat for a wave 2, but I'd rather see that in the wave 3. But that doesn't really matter. It's on such a large time scale. We're talking about the price action here, and for the meantime, we're still looking for some important fib levels to break up here, so let's just put them on the chart. So we're trading inside this pitchfork at the minute, using the A and the B. This is a shift pitchfork using the A and the B to project the wave C here. We're not at the top of it. We could come up to it. We have been tracking the median line the whole time, swinging around it. So no clear sign yet of rejection up here. And then the next thing we want to look at is we want to look at our trend-based fib extension here. This gives us a 50% on log scale. If we just come back to the arithmetic scale for a moment, we're right in the yellow zone. Right in the yellow zone. Let's come down to the 4-hour. Zoom in a bit. So you can see we've got the 65, which is the orange line here, and the 61.8 here. We're right up in that yellow zone on the chart. And this is the length of A projected from the B straight into this Fibonacci target here. And we've snagged. We've gone into a top, down, back into a top. I feel from the basic technical analysis we've already done that we're going to break through here and head higher. So, what other targets have we got? Well, 78.6 and 100 really. If we're looking for a wave C, we'd be looking probably for parity. You could stop at the 78.6, but honestly, if you go through the 61.8, 65 region, then parity could really be where you're looking for, which could rejig how we've counted this whole thing. We could have to move the wave 1 and the wave 2 up, and then the wave 3 and the 4 and the 5, and we could be going into a diagonal as we race towards the highs here. That has the price all the way up at 37,111.9, 37,100 on the Dow basically. We don't have to go that high. We could top out here. If we just have a look at what else is in the way up here, we've got our fib. This is the fib retracement of the A, and because we're going back beyond the 100 in an expanding pattern on the arithmetic scale down here, we are at the 123.6. We've gone through that, and we've double topped here for the moment at the 131.8. This is as good a place to stop a B wave as anywhere, but the next step, if this fails and we break higher, then the 161.8 at 36.532 spot 2, which is close to the 100% parity of A projected from the B. It's also in the ballpark of about 90% extension as well, and it would bring us up, depending on how long it took, it would bring us up to the very extreme outer side of this pitchfork as well. But this could meander for quite a while yet. So, all in all then, that's the best I've got for you at the moment, guys. A bunch of counts for you to ponder over. I'm still trying to find trades on the shorter time frame like I showed you on the NASDAQ, but generally the larger picture is a little tricky. here now. We just are stronger than I initially would have expected to be, us to be. So we have to keep staying on the bullish side of things, I think, and expecting higher pricing in the meantime. Even though I have counts which suggest we're approaching completion, we're not there yet, I don't think. So we'll keep an eye on things going forward, as and when we close up on this trend line on the S&P 500 and head towards targets, and as we head towards targets on the NASDAQ or fail to reach them in the bearish alternative. And we'll keep an eye on the fib levels on the Dow as well. If we have a significant breakout or break through these levels, we're going to have to reconsider again, and have to accept that the bulls are still running. Anyway, so that's it, guys. I hope you've enjoyed the analysis of the stock markets this week. If you're new to the channel and you've liked what you've seen, please subscribe to the YouTube channel, smash the like, leave us a comment in the comment section below if you want to. Feel free to share these videos, hit the bell notification icon, and to everyone watching, I've now got my Twitter set up. You can find a link to my Twitter feed in the description below. Please go along and follow me. All future updates of videos will be announced on Twitter before they show up on YouTube, and all future details concerning the upcoming Patreon launch as well will be announced on Twitter beforehand as well. So yeah, please go and follow me. Right then, guys, that's the best I've got for you for the stock markets. Please let us know what you think, like I said, and I will be back with you sometime during the week. Take care. All the best. Bye bye.